price has increased, obviously. Number of shareholders has increased. So I think the investment community is definitely seeing us as a legitimate potential producer in the short term.
Yeah, but no one's going to finance you off the back of PFS. So
I think it's about doing the DFS work that we need to do, but it just means not necessarily wrapping it up in a doorstop. That's all. The work will get done.
How do you pay for it? You're having conversations about finance, I get that, but technically, what are the things that make you nervous? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do remember to give us a thumbs up at the end. And also leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course, what you think of the company. You can also get this as a podcast or an article or a transcription on cruxinvestor.com. And of course, for Crux Club members, you get early access. And if you haven't already done so, click the button in the corner of the screen to subscribe to our YouTube channel. And for more videos like this, click the notification bell. We spoke earlier today to Justin Brown, the CEO of Element 25. They're a manganese developer in Australia and on the ASX. Manganese is not much understood, known or loved. We talked to him about the recent PFS. Numbers look great. Market has reacted extremely positively. Justin talks us through, the macro for manganese, what their business plans are, why they chose the route of getting into early production in Q2 21. Obviously at PFS stage now, so a lot to do, an accelerated time frame, given COVID, etc. Should be a nice challenge for them. They've also sorted out their money situation to get them to that point. However, they are going to need to raise some money for pilot plants and getting into production. So we look forward to hearing from them soon as to how they're going to do that. Take a look in the description below at some of the other topics discussed. Anything interests you in particular, click on the number, that's called a timestamp, and I'll jump you to that part of the video. Otherwise, enjoy what Justin has to say. Justin, how are you doing, sir?
Very well, and thanks for bringing me back.
Yeah, no problems. We had you on back in March. Obviously, things have progressed, and the world's changed slightly since we last spoke. But here we are. Why don't you give us that 1 minute overview for people new to the story, and then we'll pick it up from there.
Yeah, fantastic. So Element 25 has been busily looking at ways to commercialise our very large manganese deposit at Butcherbird. We've got a number of strategies in play involving downstream processing through a leach option, but what we've done more recently is look to optimize the front end beneficiation of the ore body to produce a concentrate for export to offshore markets in the short term and generate early cash flow to fund future expansion of what's quite an enormous resource. So that was successfully completed and released under a PFS in late May. And we've effectively taken the decision to push the button on development of that phase one strategy, which is a modest capex, about $15 million capital cost to get into a cash flow positive position in ideally Q1 2021, with some pretty meaningful cash flows being thrown off that. So it's exciting times for us. We're hard at work, and we're looking to meet that deadline.
Okay, great. Thanks for the summary. Interesting model you've chosen to go with there, kind of low capex, but get some cash flow, improve a route to market, and because it doesn't really sort of tap into the whole of the resource that you're talking about. But first of all, again, for people new to this, because manganese is not talked about much. Okay, it's not much understood. So if you don't mind, let's kind of go through the world of manganese. So what's the total size of the market? Who are the main players? And if you can give me some numbers in there.
Yeah, sure. So manganese is about 60 million tons traded annually. It's the fourth largest traded commodity globally. The end use is primarily steel. All steel has manganese, and you can't make it without it. So basically, it tends to go in lockstep with steel consumption. And that's been an uptrend for some decades and is expected to continue in that vein. So manganese demand is currently in a fairly strong uptrend. The main players, I guess, are China, obviously being the main steel producer globally. In terms of the producers of manganese, it's Australia's got a pretty big role to play. We've historically had three pretty meaningful mines here at Woody, Boodoo Creek, and Groot Island. South Africa is a major player. They account for about half of the seaborne manganese ore that's traded. There's a couple of mines in West Africa. A little bit comes out of Eastern Europe, and Brazil's the other major player. So that kind of rounds out the supply side. And consumption is global, but primarily Southeast Asia.
Okay, so talk to me about what today. I mean, you talked about two different use in steel, and then which is about 85% of the world market, and the rest is what? What's the other 15%?
Yeah, so well, it's actually more. It's more than 85 if you look at steel, because there's the high purity that we talked about last time, which goes into steel as well to a large extent. But there is a burgeoning market in lithium-ion batteries. So the question mark that everyone has is how quickly, especially given recent events with COVID-19, how quickly is that electric vehicle transition going to happen? As that happens, that will drive demand in high purity manganese sulfate for lithium-ion batteries. So we expect to see that come, but it's still in its sort of nascent stages, and its volumes are still relatively small compared with the volumes that go into steel. But that's expected to change, and I think you'll see in the next decade or two that will enjoy a big upswing and become a bigger part of the manganese story.
And it's obviously, there's more margin to be had there than steel.
Yeah, it's a premium product. Absolutely, it's a premium product. So that's right, and that's why we have ambitions to enter that space. I guess the difference here is that that's a relatively larger capital hurdle to get over to build the processing infrastructure required to do that. This is an opportunity for us to, with a fairly modest capital spend, get into cash flow positive and then use that, redirect that capital back, or that cash flow back into the project to grow it into those high purity segments.
Okay, so let's talk about that, because I'm interested in the thinking. So we're seeing this more and more with companies not choosing to go with this, I guess, old school model, build out the resources, prove it to be as big as you possibly can, and hope someone gets interested. So given that not many people discuss, know much about the manganese market, it's been tough, it's been a tough road for you guys in terms of getting interest up until this point, right? So just in terms of educating the market, let's talk about the model. So you're saying the market that you want to play in, you've targeted that. You've decided to go early, get, what are you talking about, 15 million market capex, aren't you? Something.
Yeah, so 15 million capital cost, and then there's an operating capital requirement and so total funding requirement about 25 million Aussie.
Right. Okay. So what were the options available to you, and why did you pick that?
So we're not limited by scale, as you know, because the resource size is large, and traditional thinking about mining would have said you should go bigger, go to 1 million tons or 2 million tons, which our resource size would easily be able to support. The decision was that as a new player in a commodity like manganese is really about value and use. It's not like gold bars. The customer has to appreciate its value and use. So 350,000 tons of concentrate was a bite size that we felt was easily marketable. And the strategy is that if stage one is successful, very low capital cost, stage two is just around the corner, because with a modest reinjection of capital, we can double or triple that. So we're only limited in the short term. It doesn't change our long-term thinking, which is to get much bigger and take advantage of the large resource. But it's a very simple short-term stage one strategy to get going.
Okay, and so I'm just out of interest, what were the options that you discounted? Obviously, building it up to a massive resource, but were there sort of any interim options that you looked at?
Yeah, so I mean, it was I guess the electrolytic manganese metal that we talked about last time, the manganese sulfate we talked about last time. Both of those have much higher capital hurdles. In fact, the journey for this final decision was based around developing a concentrate for feeding those larger scale hydrometallurgical plants, and it was optimizing that feed rate. And when in doing that work, we optimized it to a level that we recognized there was an opportunity to do a concentrate export business as a startup. And then it was a question of sizing that, and sizing that was probably more around marketability than capital constraints, because you could probably double this, and even if you doubled it to 30 million, it's still doable. But we felt that at this scale, entering the market would be a sensible bite-sized end of the market, and then you could look at growth strategies after that.
Okay, and how did again? I just found that whole process quite interesting about how you go about building up and planning the route that you were going to choose to enter the market. So again, looking at the end product, you talked about getting it was a bite-sized, achievable amount that you could sell into the market. So what do you know about selling into the market? Are you going to just go for a middleman, or do you think that you're going to kind of build up a team that can actually sell into market yourselves? I mean, how does it work?
Yeah, fair enough. We've got a pretty experienced marketing manager on board who's ex-BHP stainless steel division, so he's well across how you market these bulk commodities. There are a number of strategies that are potentially available to us, and we're looking at them all from trading. I mean, you can trade every cargo as a spot cargo if you want to. The issue with that for us is that presumably debt will be part of our overall financing solution when we wrap it all up. The debt lenders would like to see more certain revenue through an offtake arrangement. So we're talking to various parties on offtake, and that will involve one or more counterparties who have a track record and a balance sheet that can put some certainty under that revenue side, because that's what the debt guys will want to see in the early months until at least we pay down the debt. Beyond that, you can become more of a master of your own destiny. There's potentially ways you can improve your revenue outcomes by targeting specific markets and timing your sales. But short term, we're looking for a strong, reliable offtake partner who can sort of underpin that revenue.
So what's been happening in the manganese market in terms of pricing? Okay, I mean you've got a couple of charts in your PowerPoint, but is it erratic? Have you got some degree of confidence about pricing going forward? Because everyone bangs on about the EV revolution, EV thematic, but sure, there's no kind of certainty, and commodities come and go. Supply comes and goes into the marketplace. So again, that comes back to the earlier question. What do you know about the manganese market to give you the confidence to? Because you put out amazing IRR numbers in the PFS. It's early days. You've got a ways to go, but if it's anywhere near that, it's good news, right? So what was the pricing you used on the PFS? I didn't look.
We used a discounted pricing from the benchmark 37. That's the FOB Port Elizabeth price. That's one of the benchmarks that are used in manganese. We used some analysis by Roskill that had a forward-looking price forecast as our forward-looking curve, and then we discounted it because we're targeting a 33% grade as against a 37% grade. We applied a discount formula to that unit price to get a realistic price for our product. So that is the mechanism we used for the assumption. We think on a long-term average basis, it's a good assumption. We're happy with it. We think it's slightly conservative, if anything. However, to answer your previous question, manganese can be volatile, so you do have to be careful about what pricing mechanisms you build into your offtake agreements, and you've got to look at ways to underpin the pricing that you receive, at least during those early months when you're paying down debt. Beyond that, our all-in sustaining cost sits around about the 30th percentile globally, so we're in a good spot on the cost curve. And we've got some strategies in play that over the longer term will push further down and hopefully into the holy grail of the bottom quartile cost producer. And if you can get there, you're pretty well protected through all cycles. So our cost of production are well below the marginal producers. We think that any short-term sharp downtrends in manganese will be short-lived. Broadly speaking, demand fundamentals look good. Supply is relatively inelastic. We see a bullish future for manganese that's supported by commentary from Macquarie recently. Their headline was "Manganese ore stronger for longer." We have a similar view to that. It will be volatile. You'll have to put mechanisms in where you can ride out the rough patches, but at the same time, you'll make excellent money on the good times. So I think that's the life of a manganese producer.
Sounds like it. So let's talk about timing. Okay, you've just done a PFS. You're going to go through the traditional hurdles. Again, we've been speaking to companies recently who are deciding to, because the cycle, where they are on the cycle, they want to kind of skip a few phases, want to go from PFS to DFS. So what's your process? What's the timeline? I know you talked about Q1 21. So how are you going to do that? Yeah,
so we've got we've got a project manager who's put a detailed schedule together. We've got our tasks fairly detailed in that. We've itemised, set schedules against each of those. We're knocking them over as we go. We have a weekly meeting to monitor our progress against that schedule, and we're so far achieving our goals. The three main threads are approvals. We need to get a mining lease granted as the first step there. We just announced that we have closed our last access agreement, which was the last impediment to the grant of the mining lease. So we expect that to be granted in the immediate future. Once you do that, you can put your approvals in. Their drafting is well advanced. All the environmental baseline surveys are done. We don't see an issue with meeting our production timelines from an approval point of view, unless something comes out of left field. The offtake agreements are going extremely well. We expect to be able to announce some milestones on that in the coming weeks. And project finance process has begun. And look, it's if you look at the economics of the PFS, it's fundable, right? So on face value. So we've got to go through that process, but we don't see an issue. There is detailed engineering going on in the background. We don't expect to land a doorstop DFS in the traditional sense because it's such a simple project that the level of detailed engineering is limited. We have to do tails dams, bore fields. There's a bit of electrical integration to do, but in terms of the processing plant, we're talking about 5 or 6 key items that are off the shelf. They arrive in containers, they land on site, they're skid mounted or they're mobile, track mounted units, and integration is a really straightforward exercise. No stick build, minimal concrete. So in terms of simplicity, this is about as good as it gets.
Okay. Tell me about finance, because last time we spoke, you had about $1.5 million in the bank. You were trying to get a royalty deal over the line subject to listing on the TSX by the company. I saw that you completed that deal. I mean, did you think twice about doing that deal? I mean, given what you saw in the PFS, did you need the money? Could you have got it elsewhere? Why do a royalty deal?
Look, I think there were options available, but I'm not. I don't have any regrets about that. I think that the royalty game is their game. We'll take the cash for working capital purposes. We're still sitting pretty comfortably. We've transacted on a couple of share positions, and from a working capital point of view, we're comfortable. We do need to resolve the project financing, so there is a financing exercise to do. What form that will exactly take remains to be seen. We've got a lot of conversations going on with equity guys, debt guys, even offtake related financiers, potentially project level equity guys. So there's a lot going on in that space. So I don't have all the answers for you today, but we're very comfortable that we've got a lot of optionality.
Yeah, but no one's going to finance you off the back of PFS. So what's your preferred route, really?
Yeah, look, I think it's about doing the DFS work that we need to do, but it just means not necessarily wrapping it up in a doorstop. That's all. The work will get done. And
how do you pay for it? So, like last time you had $1.5 million, you've got another 500.
Yeah, so we've got about $5 million on the book. So we're not urgently looking for money, but we do need to raise money. So but we're in control of the timing of that.
Okay, is that because you've been selling down the? I think you were talking about Danakali. You had some ability to monetize your position there.
We sold out of a position with a company called Rarex. We've obviously got the royalty deal done.
Got it.
We've also got holdings in Danakali as well. So if you combine all of that, it's north of $5 million. The timing of disposal of remaining positions is at the board's discretion, I guess. But there's no urgency for us to rush out and take the first bid that comes through the door.
So you've sold out of Rarex completely. How much did you pull in from that?
So that was about $500,000.
Okay, so that's gone. And then the Danakali position, obviously, well, at the time it was about $3 million when we spoke in March. I don't know if things have changed.
Still about $3 million.
Right, and have you sold down any of that?
Look, probably selective disclosure of these things is probably not what the ASX would like you to do, but that'll come out in the quarterly.
Okay, when's that due?
End of the quarter.
Okay, helpful.
Coming up, imminent.
Great.
It'll be out next month to put a time frame on it.
Thank you. And Acuity Capital, you had a sort of financing facility available. Have you been using that?
We have. So you would have seen from the announcements that we raised about $500,000 at 36 cents from those guys. So that was important working capital as well.
Great. Okay. At a nice price too. So what are the things that between now and Q1 next year that you're focused on? What are the things that say, Craig, we need to get this nailed? Obviously, you're having conversations about finance. I get that, but technically, what are the things that make you nervous?
Probably not a lot, to be honest with you. The work that we did in the PFS, we kind of call it a PFS plus. So we don't expect any movement in the capital, any meaningful movement. I mean, that included a contingency. We think that's ample for any variance that may come in. There'll be puts and takes. We'll save a bit on some, lose a bit on others, but we think the number is unlikely to deviate from the 15 million that we put in the PFS. We are refining the working capital modelling. I mean, that working capital that you saw there of 9 million was basically 3 months operating costs. Nothing more sophisticated. We think we can do better than that. In terms of technicals, the detailed engineering on electrics, the specifications on plant and equipment, is being done now. We're identifying minor issues that we're altering, but no major changes in that from the PFS. So, man, nothing's keeping me awake today, to be honest with you. Unless something comes out of left field, I think we're well on track.
Okay. And I saw Seamus has been buying in the market, which is obviously good, sends a nice message to shareholders and new potential shareholders. Have you seen any movement from some of the funds? I mean, you're still small, right? Yes, probably not yet quite interesting enough. But have you been having more conversations with them?
We had a lot of interest. I mean, there's no doubt there's a lot of interest. I have calls most days, and expect that to continue. I think people see this as a bit of a surprise story. It caught a lot of people unawares, and I think people are sort of looking at it very closely. Increasingly since we sort of kicked off. I mean, I looked at a couple of numbers. I mean, our average volume before the PFS was about 40,000 shares. We're now averaging about 890,000 shares. That was obviously skewed because of the few big sessions we had immediately after the PFS, but it's a healthy increase in volumes. Prices increased, obviously. Number of shareholders has increased. So I think the investment community is definitely seeing us as a legitimate potential producer in the short term.
Okay. Yeah. Well, and I hope they do. What's next then? What's next? What should we be looking out for?
50 things. We've got to confirm a borefield location. We've got to sort of lay out the plant. We've got to finish that design. We've got to get a main roads access crossing to build our haul road so we can get our ore to market. We've got to finalise contracts with haulage operators and port. We've got to finalise the project finance. We've got to put down payments on long lead time items. There's a raft of things that all go with building a project, and we've even got to upgrade our accounting system. So, just if you want to be really bored, we could talk about that for a little while.
No, we're good. Look, Justin, it's a nice little update. You said you were going to do it. You did it. The numbers look great. I guess the market just wants you to sort of see can you deliver it in that accelerated timeframe that you're hoping to.
Yeah, no, exactly. And I think, just to reiterate, there's three core threads. There's permits, there's finance, and there's offtake. And I think if your viewers watch closely, they should see meaningful milestones in all three going forward in the short term and medium term, and then kicking off in Q1. So we're on track so far.
Good. Okay. Well, pick up the phone and let us know when you've hit any of those or all of those. I'll be very interested to hear.
We'll do it, and thanks for the opportunity today.